Hey guys, it's Sam here and welcome back to my channel. In today's video, I want to talk about what is considered a good credit score and how to avoid a big mistake that people often make that costs them a dream home or a dream car or even a job offer. You may have heard that a credit score of about 700 or more is considered a good credit score, and that may be true, but there's a lot more to that. People often make the big mistake of thinking they do have a good credit score and eventually find out that they are way off the mark because they didn't do their research. For instance, take this story posted on CNBC a few days ago about a guy by the name of Curtis Webb. He was shocked to find out that the actual credit score his mortgage lender pulled was more than 40 points lower than the score he was monitoring on Credit Karma. This is why it's so important to understand the details behind your credit score so that you don't get blindsided or disappointed. So by the end of this video, you'll know exactly how to figure out what is the right credit score for what you're trying to do and 3 simple tips to avoid any unpleasant surprises. Now, I've worked with credit scores for most of my professional career, ranging from advanced credit risk modeling to credit policies to collections recovery strategy and analytics for some of the biggest financial institutions in the country. Some of the work that my team and I did impacted the financial decisions of millions of customers. So it's safe to say that I'm very familiar with how these scores are calculated and how they're used in consumer finance. So let's start from square one. When somebody mentions credit score, they're usually referring to something known as the FICO score, which is by far the most popular credit score used by banks and lenders and property managers and so forth. But there are also other types of credit score brands, such as Vantage Score, which you may have heard of. And not only are there different credit score brands, but there's different credit score models within a brand. For FICO, there's a base score, which is like a general credit score, but also FICO scores that are tailored towards specific industries like credit cards or mortgages or a car loan, and even a different FICO score for those free scores that you get through your credit card app or your banking app. Those are also a different credit score model. This is why the free credit scores that you find in your banking app or your credit card app or through Credit Karma, these are not the scores that your lender will see to qualify you for whatever you're trying to finance. And as a forewarning, this is especially true with mortgages. Virtually any free credit score you find, you can assume that it is meant for educational purposes only and to give you a ballpark estimate of where you stand. So no lender is actually using those scores to lend to anyone. If you want the official FICO score, somebody somewhere needs to be paying FICO, the company, to release it because, newsflash, they're in the business of making money off of FICO scores.
Shut up and take my money!
But it gets more complicated than just different scores. So you know how Apple has different iPhone models and different versions each year?
iPhone 8, iPhone 10, iPhone XS. This is iPhone 11, the next generation of iPhone.
Well, FICO scores also come in different versions as well. There are newer versions and older versions, and there's various reasons why any particular lender or an industry might stick with an older version compared to a newer version. And this is why I say that there's likely going to be a bigger discrepancy between a free credit score that you see online or through your banking app or credit card app compared to what the lender actually sees, because mortgage lenders tend to stick with the older version of FICO scores because they're a little bit more conservative when it comes to underwriting for mortgages. And it doesn't stop there. There's another layer of complexity, and it has to do with the 3 credit bureaus, which are Equifax, Experian, and TransUnion. These 3 credit bureaus, as well as the bank or lender that you may be directly working with, may have their own proprietary credit score models that they are using. So let me show you just how different my credit scores are because of all these complexities. So I get a free credit score, a free educational credit score from every bank and credit card company that I have a relationship with. And you would think that the scores should all be the same or very close together, but that's just not true because of the things that I mentioned. This first screen you're looking at is my free Experian app, and it is telling me my FICO score 8 is 800. FICO score 8 is the most popular version of the FICO score that is being used by lenders. Bank of America is telling me my FICO score is 794, brought to you by TransUnion. Citibank is telling me my FICO score is 815, And Capital One is telling me my score is 768, which is most likely a Vantage score because it's so different than the others. Yeah, it's pretty confusing, right? Like, which one do I trust? Between the lowest score to the highest score, I'm looking at a difference of more than 40 points. Now, as I was saying before, the lenders do not actually use these free educational scores per se, but that's not to say that we cannot get some value from this information collectively. This leads me to the first tip in what you need to do if you're trying to figure out what is the right credit score for what you're trying to do, and you don't want to be surprised when you're sitting at the table with the lender for the first time. Do what I did and collect all the free credit scores that you can get from your bank or your credit card companies, and get a sense of what is the range of credit scores that you are seeing. Do not rely on one credit score alone, but try to get as many credit scores as you can. As a side note, the Points Guy put together this really useful table on 18 different banks and services that provide free credit scores, especially where they come from and what score model they are using. As always, I'll link to this site in the description below. You can also pay to get your official FICO score from myfico.com. However, in my opinion, it is not worth paying for it because even if you do, it's still not the same score that your lender will see. Because as I said before, lenders typically see a score that's not available to consumers like you and I. In fact, in 2012, the CFPB did a study in which they compared the credit score sold to consumers and the credit score sold to creditors or lenders, and they concluded consumers cannot know ahead of time whether the scores they purchase will closely track or vary moderately or significantly from a score sold to creditors. Thus, consumers should not rely on credit scores they purchase exclusively as a guide to how creditors will view their credit quality. Now that you have a sense of where your credit score stands, my second tip is to go to the lender that you're working with and ask them directly what credit score that they're looking for to approve someone for either a mortgage or a car loan or whatever it is that you want. If you don't have a lender in mind or you're just starting your search, then I just recommend doing a quick Google search to get a sense of what credit scores you should be expected to have. For instance here, NerdWallet has a nifty table that summarizes the rates you can expect based on different credit score ranges for a car loan. I recommend once you're seriously interested to identify those 3 or 4 lenders that you're considering working with and ask them exactly what rate you'd get for different credit score tiers, because every lender has a different policy and those differences can definitely add up. If you want to take it a step further, then you can find out which credit score brand or version that your lender is using to qualify you. Now, this is a very specific information that you might not be able to get, but if you do, it will be really helpful to narrow down which free credit scores are probably better reflecting what the lender will see on their end. And this is especially helpful if you happen to have a credit score range that is sitting between 2 different credit score tiers, so that you can narrow it down a little bit better. After you get all that information from the lender, my third tip is to make sure that you don't make any changes to your credit profile before you close on your mortgage or your car loan or whatever it is that you're trying to pursue. What I mean by this is that you don't want to apply for anything that's going to put a hard pull on your credit history or anything that's going to change your credit because it's going to change your credit score. Hard credit pulls like applying for a credit card or a mortgage is going to lower your credit score by about 5 to 10 points. But it really depends on the number of accounts you have and how long your credit history is. The bottom line is you don't want to apply for anything that is going to lower your credit score when you're just about to apply for a loan or you're about to finance a big purchase. If you enjoyed this video, be sure to drop a like down below and share with a friend if you think it will be valuable to them. Don't forget to subscribe to my channel so that you don't miss out on any new videos on how to achieve financial independence and grow your wealth. Thanks for watching, and I'll see you guys next time.